Financial Fix on the PIX 11 Morning News is brought to you by Ridgewood Savings Bank. Multiply the good.
All right, so how many times did you tell your parents your money doesn't, your money does not grow on trees? Or how many times have you heard your children say, it's only $1? I'm always like, a $1. Let's teach our kids the importance of money and why it is so important to save. Paul Golden, director of smartaboutmoney.org.
Smartaboutmoney.org.
Well, I don't know why I can never say that. Smartaboutmoney.org says the earlier you start, the lessons, the better. Here we go. Sorry, Paul. Let's start with the ages, because I think kids just don't really understand saving, the concept of it.
I have parents. Well, I am the parent of 2 young kids. I'd like to think that, and I think all parents would like to think that our kids are getting access to this education in schools. Only 17 states have mandated that actually takes place on the high school level. So it just shows you that as parents, we have to be very involved. We have to exercise our influence because we have the most influence for how our kids are going to get financial behavior. So back to your question, how early do you start? Toddler age. That's the best place to start.
So we have a 2 to 4, and then we have a side chart right there. Introduce coins, put money in a clear jar, and play a game of store. What does that mean?
Well, what we're trying to do is we're trying to teach kids equivalency, right? So the old days of having the piggy bank, now you want the clear jars. They want to see money going up. I have these really cool screw top ones that have a digital reader, so as you put the coins in, you can see the amount add up. That's important. We're also teaching our kids very young age about needs versus wants. That's a very early discussion that needs to go on and be continued throughout the the aging of the child.
Okay. Also, let's talk about ages 5 to 7. What should you be learning?
All right, 5 to 7, let's start to have a discussion about how money comes into the household and how it goes out, right? Today, what we are losing is a sense of tangibility about money. So our paychecks are electronically deposited. Our kids see us go to the ATM, money spits out. They have to start to understand that we earn income from our jobs. It goes into our bank account, and then we have all these responsibilities that we have to pay. So you want to start that discussion, continue needs versus wants, but start to look for those daily interactions where you can talk to your child about money. My kids are using apps. My kids are playing video games. I think there's financial lessons in there. The allowance discussion, that debate rages a little bit. So when you start 5 to 7, 8 to 10, yes, allowance becomes a very important tool. It's less about how much money you're giving and if you're tying that to reward or chores. It's more about the mechanics of it. Give it on a consistent basis. Treat it like a paycheck, because what we want to teach kids is to plan, save, needs versus wants. When it runs out, it's out. Don't bail them out.
Don't bail them out.
We don't get bailouts when we're adults.
Exactly. And I don't pay for chores around the house. That's your duty to your house. No, that's your duty to your house.
I would like to get paid for chores.
Exactly. Ages 8 to 10, what changes are there, and what do you need to discuss at that time?
I start to work with my kids, and we're right in this range. We're in 8 to 10 to preteen. Daily interactions with money, so when I take them out to the restaurant, the bill comes, it goes right in front of them. I make them calculate the tip.
Wow. So you explain how you earn it, you go over family expenses, and then you discuss it needs versus wants.
So you can increase the allowance at this part. You want to get them understanding insurance and investing basics and understanding how bank products work. So get them involved into a savings. I got a 13-year-old son. I just got him involved in a savings, and he's really excited about it. So it's a great time to start to teach him about how bank accounts work. And
lastly, 11 to 13, what should parents know about this age?
This is where it gets pretty critical, because everything's commercial. Like they want cell phones, they want new technology, all that kind of stuff. I think it's okay to start to teach kids about mistakes that we've made. There's a lot to learn from those. So put it in the context of what you learned from it. And then I also think that we want to just have continued discussion. We don't want to lecture our kids when it comes to money. We want to set positive examples. I always think about financial education as like an inoculation. It can't be a one-time thing. We have to have booster shots along the way, right?
I like it.
So that's what we need to do, is just continue discussion. Don't lecture your kids. They don't want to hear a lecture.
And I also think, if you start the savings plans now, it kind of works. When they know need versus want, it sort of works.
It's so important to reinforce that. Like, I have 2 kids. They've grown up in the same household, the same rules. One's a saver. The other one, as soon as he gets money, he's just like, he wants to get rid of it.
He's a consumer.
Hey, we have to understand that kids have different personalities. We want to exercise those better.
All right. It's as simple as a glass jar, everybody. Simple as a glass jar. For a timetable of how you can teach your kids about the value of money, please download our PIX 11 app. And of course, we want to thank Paul Golden, director of smartaboutmoney.org, for spending time with us this morning.